Well, hi everyone. Welcome to the session. Hope everyone is doing well. I see some people still logging on. Let's see. Let me do a quick screen share and we'll get started.
Oh, and your camera, Sid.
All right. My camera. Here we go. Hi. Hi everyone. Welcome to the seminar, the session today. Hope everyone is doing really well. It's a Thursday. It's happy Thursday. A lot to cover today, so let me get started. And thanks for being here. Here's the agenda. I'm going to go through a quick introduction about myself and then talk about the strategy. We'll go through the checklist of what the strategy is for the SID method. We'll take a look at some watch lists and some results, specifically back testing results. Then we'll take a look at three posts that I did. We'll go over those and some challenges in terms of using the strategy. And then we have quite a few questions to answer. So we'll go through all those and then we'll take a look at what's moving crazy market today. And then based on that, we'll take a look at some potential trades using the SID method with the way the market is moving. And then we'll wrap everything up. All right, let's get going. So here's a quote I like to use. Trade after confirmation, not prediction. You're going to see a lot of predictions out there from the so-called experts. But what we do with the SID method, we look for confirmation with the specific indicators that we're using. And we'll go through that and you'll see what I mean. So here is a picture of on the left, me and my wife, we're smiling. You can see the aloha hat. We're in Hawaii. We see those umbrella drinks coming our way. That's why we have the big smiles. And on the right, another vacation we took in Yellowstone. That was really awesome. You could see difference in temperature there too in the clothing. And then on the left is a recent vacation that I took in April to Hawaii. We happened to catch whales that were still there in April, caught them breaching. And then on the right here is a photo of my two daughters. This is Rachel and Dina, and my granddaughter, Naomi. It's an older photo, but I like it. All smiles, so I need to update that. So this is a little bit about me. So I like to be called Sid. When I hear Sydney, I think I'm in trouble because that's what my parents called me when I was in big trouble. Went to school back east at Rutgers, studied engineering, and then got a master's in business from Southern Illinois University at Edwardsville. Currently living in Arizona, but I've lived in both of the coasts, lived in New Jersey, lived in California, in the middle of the country, lived in Texas for a while. So my hobbies, I was doing a lot of running, ran a lot of marathons, Boston Marathon with my brother, into a lot of tennis. Earlier, now doing more pickleball. Did a lot of traveling in my career, working and vacation wise. Love trading, love coaching. Held a lot of high tech jobs. I worked for IBM for many years, Sun Microsystems, Oracle, and then PayPal before moving to Arizona and retiring out here. I've been trading for over 25 years using a lot of strategies. Most of them didn't work, found one that did, and we'll talk about that in more detail. I love coaching family and friends, both in running and stock trading, and love teaching, obviously. And I'm currently a trading academy instructor. So that's me. Here is the SID method strategy checklist. I'm going through this real fast because I'm going to go through each of these on the chart. It's going to make more sense when I cover the checklist on the chart. And this is a slide which shows the trades, the trade stock symbols, a cross section of the market. These are all profitable trades that I've done over the years. And the reason I have this slide up is it's a watch list that you can use. It covers all the areas of the market. Money moves from one area of the market to another. So when it does, you'll either get oversold or overbought, and you can have some profitable trades. So all the areas covered here, areas such as financials, technology, real estate, all different areas of the market are covered in this watch list. And I could go through this watch list once I have it on TradingView. I click on each one of these, and within less than 10 minutes, I can tell you if I have an RSI oversold, meaning less than 30 RSI, or overbought, greater than 70 RSI, and then I'll dive deep into that. But I can go through watch lists of 50, 60 trades in less than 10 minutes. The other area where you can look for potential trades are the major indices, the DIA, diamonds, Qs, spiders, and IWM small stocks. The diamonds 30 top industrial charts, these are the major components, and you can either trade the index itself if it's oversold or overbought, or any of these components if they're oversold or overbought. And if I find one of these components, I'll look at the index and vice versa. If I find the index oversold or overbought, I'll look at these components. The underlying stocks here under Qs, which are technology stocks, these are called Magnificent Seven. They move the market when the price moves because they're high capitalization stocks, very high cap stocks. They're familiar names: Apple, Microsoft, Amazon, etc. The spiders represent about 80% of the market, and you could see some of the same stocks are in different indices as well. So the spider is 80% of the market. We'll look at that chart down the road to see what the market's doing. IWM, small cap stocks. So these are important if the market overall is in an uptrend to be in a true uptrend, lifting all the stocks, the small caps will go as well. They're not as familiar names, but they are important in terms of the market. And this is the other area where I look for potential trades. They're exchange traded funds, ETFs. There are about 2,000 in the market, a lot of them, but there are 11 major ETFs, and these are highlighted with the X symbol, starting with an X. These are the descriptions, and to the right of the X symbol are the major components of that ETF. So you could trade the ETF if it's oversold or overbought, or you can trade any of the components as well. So that's another source of potential trades. So now we're going to take a look at backtesting. So we're going to backtest the SID method strategy. What backtesting is the process of testing the strategy using historical market data. So we go back, take a look at history, take a look at that data, apply the strategy and see how it worked. And then the reason we're doing that is because we want to find out how effective that strategy is before we apply it in any demo or live trading. So backtesting is important. And just a note that tomorrow, Jonathan is going to be doing some backtesting. So be sure to tune in for that as well. So here is the backtesting results. We see we have 25 folks that have done backtesting module, and that module consists of doing minimum of 300 trades. You can see quite a few have done more than 300. And these folks, in doing all these backtesting, have learned a lot about the strategy, and they're really well versed in it, and they've done really well. And you could see that the backtesting results, we have the win rate over 70%, average of all of them 79%. So this is key. Again, congrats to all these folks, and they've learned a lot from doing the strategy, as you'll see as we go through it. But we're going to specifically look at one backtesting result from Francis, and he did 310 trades with an 85% win rate on all of his backtesting. We're going to take a look at one of those. So we're going to take a look at this backtest, this Uber backtest trade that was done on February 21st, 2025 this year. So it's pretty current, and Francis did that. This is the spreadsheet that's used for backtesting. I only have a slide of the left side of the spreadsheet. You go to the right side, there's a lot more, including links to TradingView, et cetera. But in this particular spreadsheet, you could see there's a lot of data that gets filled in. We have the date of the entrance date, the exit date, we have entry price, stop loss, percent risk, et cetera, and so on. So we're going to look at on one specific trade at all this data that gets filled in on the chart. And we'll see how that works. So we're going to take a look at this trade. So here is a backtesting trade for Uber. We're all familiar with Uber as a company and what they do. Car rides, if you need an Uber, if you need a car ride, you just call them. So here is the trade that Francis did on February 21st, 2025. So what I like to do is put the strategy on the chart. So we go through the steps of the strategy. And here is the first step. Strategy. First thing we look for is a signal. We need an RSI signal. We're either going to be overbought or oversold. Oversold means below 30 RSI. Overbought means above 70. So here we have a signal overbought greater than 70 on 210. So this white vertical line here shows us when we became overbought. So we put this arrow in, we see RSI overbought on this date. We see right here went above 70. So what will happen is we may have Uber on our watch list, and all of a sudden, or we may have an alert that says, okay, I could set an alert for Uber in TradingView that says, tell me when Uber goes above 70 or below 30. We get that alert, and all of a sudden we see, okay, on this date, we come in on this date, here we are, and we see we got this overbought signal. So the next step is we need to wait once we get the signal for the RSI and MACD to align in the same direction. So since we're overbought, we're looking for price to move down. So we have the RSI and MACD step two aligning in the down direction on 221. So here's a date, 221, when the RSI right here is down and the MACD is down, pointing down right here on this date. So now we have an alignment. Now, when we have the alignment, we need to check for earnings. Make sure that earnings is not within 14 days of the trade. So if you're going to trading here, earnings has to be at least 14 days away or more. Now we see the big E here of earnings came up earlier, so we don't have earnings till you don't even see it on this chart. It's way out here. So we're way more than 14 days, so that's good. We're okay on earnings. Now, if earnings were coming up within 14 days of this trade day, we would not trade it. It has to be at least 14 days out. So now what happens is we look for price patterns. Here's the date, for the entry date we're looking at when RSI and MACD line. There are no price patterns here. If we saw a double top or double bottom, we'd point that out. But you don't have to have a price pattern to trade. It's a confirmation. If we have a price pattern that gives us more confidence that the trade's going to work. But no price pattern, that's fine. We still entered the trade on 210 because we have the alignment and we have got the signal. Once we enter the trade, and how do we enter the trade? So we enter the trade at this date. What happens is when you're on this date in trading view, you come up here to the upper left and you see various numbers, OHLC, open, high, low, close, or current. I use close because I usually trade towards the end of the day, but any time of the day when you get this alignment, this C price, the current price, is going to be the price you use. So when we enter this trade on 210, the current price was 78.89. So if we looked up here, the current price on this date at the time we saw the alignment, it could be in the morning, could be at noon, could be the end of the day. As soon as we see that alignment, we go up here, take that price and say, that's our entry. That's our entry price, 78.89 on this date. Once we have that set, we have to do risk management to make sure we don't blow out our account. So we have to set a stop loss. So the stop loss right here, the key to the stop loss is it's set between two dates. It's set between the entry date, which we have right here, and the signal date. So it's set between these two dates. We look for the highest high if we're doing overboughts and we round up. If we're doing oversolds, we look for the lowest low and round down. But since we're doing overboughts, we look here. This is our highest high. You see the stop loss on 221. This particular date here happened to be the same date we entered. Now, if this price were higher up here, it would be this specific day and we get that current price. But the highest high is here on the date we entered, and that high was 82.10, and we round up to 83. So our stop loss is 83. So now we have a signal, we have an entry date, we have a stop loss. Now we watch for the RSI. We see the RSI coming down, down, down. It finally hits our RSI 50. Take profit right here. RSI 50 is hit on March 10th. Now, what price do we exit? When we get RSI 50, we exit at, again, what that current price is. As soon as we get RSI 50. Now, if you're looking at the chart and you visually see RSI 50 hit in the morning or at noon or at the end of the day, you go up here and you sell at what the current price is. Now, if you set an alert, you could be doing something else. You get an alert that RSI 50 has been hit. You can set that alert in TradingView. If you go into Cafe, Classroom, Tutorials, Jonathan has done an excellent job with a lot of TradingView tutorials and to show you how to set the RSI 50. So once you get that alert, you go in, you sell, here's the price you sell. Now, what was our gain? So we gained 5.83. The difference was between the entry price and the exit price. Now we're shorting, so that means the exit price is lower than entry price. So a lot of people get confused. Why is my price lower when I get out and I'm making a profit? Because you're shorting, you're selling, meaning when price goes down, you make a profit when you're shorting, and that's an overbought trade. So here is the difference between this, the gain 5.83. So what's missing on this is, well, Sid, that's a nice trade, but how many shares do I buy? How much money do I spend? Well, this doesn't tell you that, but what will is this. We're going to use a position size calculator, and that's used to show you how much you're going to spend, how many shares to buy. And it's based on a couple of things. two major things. One, what is your account value you're using? And number two, what's the risk amount? And if you clicked on this, you would get a live version of the position size calculator, which I did and filled in. Now, here's what the calculator looks like. The values, the colored columns are ones you fill in. So the columns in color here are the ones you fill in. We're going to take a look at this one. This is trade number one. So we filled in, we have an account value starting at $2,000 account. We're only going to risk 0.5%. So what that means is we're not comfortable risking more than 0.5% based on this account size. Now we fill in the stock entry price, which we get from the backtest spreadsheet or the chart that we just saw. This was the entry price. We fill in the stop loss. We fill in the information about the trade. This is easy. What are you trading? You're trading long or short? What's the date of the trade? Fill these in. Then this is the exit price, which we got from the chart or the backtest spreadsheet. We got out at this price. Now what happens, the calculator calculates all of these columns that are shown in black. So on this first one, we see the calculator calculates what's your risk per position, $10. This is the most you're going to lose on this trade if you get stopped out. $10 is the most because it depends on your account value and risk percent. So you're only losing 10 bucks. Now, if we look at the risk per trade for $4.11, the percent risk per position, 5% risk. But these two columns are important. Position size. Well, we asked, well, how much are we going to spend on this trade? We're going to spend $192. How many shares are we going to buy? 2.433. Now, obviously, a lot of brokers, you can't buy fractional shares. So you would round this down to two because you want to be within your risk tolerance. So you would buy two shares. And of course, this number would be a little bit lower. Now, again, you're only risking $10 on this. Even though you're spending 192, you're not risking $192, you're risking 10. So based on those numbers, what will happen is you see here, your total profit would be $14.18 on these numbers. So you're risking $10, you're making $14.18. Now, if we take a look at the second scenario, same account value, but we're risking 2%. That's the highest I go in terms of risk per single trade, 2%. So we're risking $40 in the same scenario with the prices. And the numbers here, we're risking $768 on this trade. Or we're spending, I should say, not risking. You're risking $40. You're spending $768. This is how many shares you're going to be buying. 9.732, you would round down to 9 to stay within your risk level. And your profit would be $56.74 on a $40 risk. Now we've graduated to a $5,000 account, but we're only going to risk 0.5%. So you're only risking $25. Your gain is $35.46. You're spending $480 on this trade. Out of your 5,000, you're buying 6 shares. Now, where you are $5,000 account, the next scenario, we're 2%. This is our maximum risk. So we see we're risking $1,000 on this $5,000 or $100 on this $5,000 account. $100, you go back here, you make $141.85. Now we've gotten to be really good at this, gone through all the coursework, became a six-figure trader. Now, six figures at $1,000 is your account size. I'm only going to risk 1%. I have a lot of money. I don't want to risk a lot. I'm conservative for only risking 1%. Now, remember, you can risk between 0.5 and 2% as the range you want to use. 1% risk, you're risking $1,000 out of your 100,000. You're spending 19,000 on that trade. You're buying 243 shares. You're going to get $1,400 on profit on this $1,000 risk. So that's how the position size calculator works. Use it. It's going to keep you from blowing out your account. You need it as part of risk management. All right. So now we take a look at the Uber trades that Francis did, and he did 9 Uber trades on the back test. Here they are. And you could see the wins. He had 9 trades, 3 long, 6 short, 8 wins and 1 loss, 89% win rate. So anything over a 70% win rate on back testing, we have what we call a new watch list we put together, a BTW, which is a back test winners watch list. So here is your back test winners watch list. And on this watch list, we would put Uber, we're adding Uber to the list. Now, some of these, like IBM, you have on this backtest winners watch list. You also have my original watch list, which is a cross section of the market. So there'll be some duplications. But again, I can go through this watch list in less than 10 minutes just to find RSI oversold or overbought. Then I dive deep. So that's our backtest winners watch list. Now I'm going to go through some posts that we did. Now, this is a really good post, and thanks for everyone who decided to go in and do this. That's great. It's really good practice in terms of using the SID method strategy, applying it to specific trades. Now, what I did is I gave you a stock and I gave you a date. And I said, this is the stock, this is the date. So the first thing you want to do is go in the chart, put a vertical line on that date. And I said, okay, now answer these questions. Is there an RSI signal before the date that would show either oversold or overbought? Is there alignment with the RSI and MACD in the same direction? So you can enter that. What would be the stop loss for each trade? And then down here, how many dollars per share profit would be for each trade? So those are questions that to be answered. And these were the answers, but I'll show you those on the charts as well real quickly. So we'll go through those. So here is the first one, A, B, and B chart. We pull it up. I gave you this date right here. This was the date that I listed. I said, do this date. And from this date, do we have an RSI oversold or overbought signal? Yes, we have right here an RSI oversold. We got the signal. And so on this date, we could enter if the RSI is pointing up and the MACD is pointing up. So that gives us an entry. Right here, we enter on this date. That's the price we got from the current value on that date. And then we exit on this price when RSI hits 50. And then what happened? We had a gain of 5.28 points or dollars per share. We went up in $5.28, 4.2% return on this entry price. All right, so that was A, B, and B, and you could check and go through and check yourself against this. Now, what you could do, which I haven't done here, is once you get this, if you want practice with the position size calculator, use this data and go in and do position sizing for different values and different percents. It's good practice. Now, in the next one, CAG, I gave you this date, and similarly, you go through, find it oversold, signal right here, RSI up, MACD up, and we have a stop loss set. We have RSI 50. So we enter on this price, exit on that price. We had a gain of 0.7 points. Seems low, but remember, this is a low price stock. So what was the percent? 3.7% gain on that stock, right? In 7 days, right? That was a trade. All right, the next one, MMC. Similarly, I gave you this date. We go back and we see we have an oversold condition. So we look for RSI up, MACD up, set the stop loss, and here is our entry, and then we exit on this. So we gain 5.45 points on this one, or dollars per share gain on that trade, and 2.7% in 7 days again. The next one, PM, Philip Morris, we had this date as an entry, and we had an RSI oversold spotted right here. And then we had RSI up, MACD up, and we had a stop loss put right here. And then we entered the trade at 164.14, exit at 170.18, gain was 6.04 points or dollars per share, 3.7% in 3 days. All right. Now, the last one we did, UNH, United Healthcare. Here was the date I gave you, and we look back and we had an RSI oversold here below 30. So we put that vertical line there, and then we say, okay, we were looking for RSI up and MACD up at the same time. It happened on this date that I gave you. So that was the entry date at this amount. We exited 1 day later. All of a sudden, boom, it hit our RSI 50. We exited at this price, which we got up here. So entry, exit, the gain 10.24, 3.9% in 1 day. Now, if you took a look at all those five, the average days was about 5 days on all those trades. All right, now one thing that's interesting, if anyone noticed, all of our RSI signals were oversold, which means we were trading stocks that were going to be going up in value. Now, what happens is, if you look at the overall market, let's take a look at this slide. Here's the overall market represented by the spiders. And you can see that we have up moves and retracement, down moves, up moves, down moves. So during this period, the five stocks I gave you look what the market was doing. It was going up. So I like to use the analogy of the boats in a harbor. So if you have a harbor with water, if the water if the tide comes in, the water goes up, all those boats are going to go up with the water, unless some of the boats have holes in them, which is a different discussion. But most of the boats are going to go up, right? So if the market's going up, we'd be trading oversold stocks because they've been beaten up, and now the market's going up. So the oversolds below RSI below 30 are going to start to move up with the market because all of the stocks which represent boats in the harbor are going to move up when the water comes in. So during this period, you saw all those oversold stocks were traded for profits, right? So if I had two stocks I was looking at here, one was oversold and one was overbought, and everything else was the same, I'd go with the oversold one because the market's going to be moving it up. Now notice here it's come down, so I had some trades here on the downside, overbought trades. All right, hope that makes sense. All right, post two, the importance of self-esteem. Yeah. So I thought a lot about what the post should be, and I thought, well, this isn't talked a lot about, but it's really important. The key to success, a lot of the top folks in any field, they talk about believing in yourself or having self-esteem. That's really, really important, right? So the self-esteem. And I appreciate all these people responding, giving their response to the self-esteem, really good responses. I appreciate that. And then I said I would take a look at, well, how do we build self-esteem? So here's some thoughts I had about it, and I'm sure you have some as well, and can fill it in the community when you have a chance as well. So building a healthy self-esteem, right? So you want to go out and acquire knowledge, which you're doing now if you're enrolled in the courses. You're going to understand the technicals, understand RSI and MACD indicators and how they're used in the SID method. Learn about trading psychology. There's a lot in the cafe as well as the academy about trading psychology. Go through that, learn that, start trading small. Obviously, when you do anything, start small and build up as you gain confidence. So maintaining discipline, right? So that means you follow the rules, no deviations or emotional trading. This is going to create trust in yourself and as well as in your plan that you're using. And the next thing is evaluate yourself, right? Put emphasis on process, not results. If you're following the process, following the rules, that's a good thing. And emphasize that with yourself. Now, how did you do? Are you becoming consistent and following the rules? All right, that's going to build self-esteem. How to grow your confidence, right? Be active in trading community. A lot of you just being here is good, and responding to posts, it's going to be really key in terms of being active. You're going to see others succeed, and that helps you believe that you can do it too, as soon as you see others do it as well. Now, overcome bigger barriers. As you go along, every hurdle cleared that you clear is going to boost your confidence, and you're going to get a lot of them. So hopefully you know that you can expect that going in, that there are going to be a lot of challenges and hurdles and barriers. Each time you overcome it, you're going to improve your confidence, and you're going to look back in 3 to 6 months, see how far you've come. That's going to be key, and that's going to help you as well. So hopefully those thoughts will help you build some self-esteem, healthy self-esteem. All right. Now, the other post they had was about happiness, related, but to be successful in trading, happiness is also a key factor. A lot of people don't realize that, but if you're not in a happy state of mind, then you're not going to be doing well. So appreciate all these responses. Um, Really enjoy this perspective. Happiness definitely changes how we show up at the screens. Yep, trading feels clearer and less forced when life balance is in place, for sure. And Shelley says, love this perspective. It makes so much sense. Yep, it does. Keep thinking about it and you'll see. Totally agree. Happiness and balance, according to Ralph, plays a huge role, right? When you're a good headspace, it's much easier to stay disciplined, which is key. A lot of traders fail because they're not disciplined. So if you're in a happy state, you're going to be more disciplined. You could see the big picture. So in short, happiness helps you to have a larger view and perspective and not worry about all the small stuff. You're progressing in your long-term goals, and being happy is going to help you get there. All right. So now we're going to have some questions. We have quite a few, some really interesting ones. So we'll go through all these. So Vic says, is there a way to determine the price of the stock will be when the RSI reaches 50? No, you have to go in manually. You can get an alert that RSI reaches 50 or look at the chart, but there's no way no way to determine what that price is going to be of the stock. You can determine when it hits RSI 50, then you go in, whatever that price is, you sell. Have you ever missed out on closing a trade because you weren't able to put the order in timely fashion? Closing a trade always happens with me. I usually get the alert and go in pretty quickly. I don't miss out. I may be a little late, but I still get the trade closed out. Do I miss out on some profits? Sometimes, yes. But as long as I'm making profits and with a good win rate, I'm happy. Um, when trading options, okay, so the question around options is option contract price. So stop loss and take profit option contracts prices on your brokerage account, what option contract price will be. So you close, you don't know what the option price will be. Similarly, you don't know what the stock price will be. But when you hit the RSI 50, all right, or when the stop loss is reached, right, that's when you get out of your options, either at a profit RSI 50 or the stop loss. And you can actually set a stop loss on the option. Let's say you paid $500 for some options you bought, and let's say you want to not lose more than $100. So you set a stop loss at $400 on that option. You can just set a stop loss on an option just like you can on a stock. But basically, if you follow the stock price, if you hit RSI 50 on the stock price, you get out and sell whatever that option is. Same with the stop loss, you'll get out. All right, once a trade significantly moved to profit but has not reached signal to close out experience to tell you to move your stop loss? No. We don't, it's not in the rule. Again, trying to keep the rules simple at this point in time. Strategy, take profit RSI 50. Don't move the stop loss, just get out. I've seen many times where it goes up, you'd have more profit, but just as many goes down and you lose profit. And if you get stopped out, you lose a little bit of the profit. So right now, I'd say no. The rule says get out RSI 50. All right. Next question, still from Vic. Love your strategy, finding it hard to look for trade candidates without spending a very long time looking at each stock from the resources you suggest to see if it qualifies. Would be very interesting how you do it in 10 minutes. So the 10-minute part, Vic, is taking a look at RSI signals, whether you're oversold or overbought. I can go through 50, 60 stocks in less than 10 minutes. Just write down the ones that are RSI less than 30, oversold, or RSI greater than 70 overbought. So you write them down, then you dive deep. Diving deep will take a little more time. But let's say you have a list of 50, you may come up with 5 stocks that you have signals for. Then you dive into those 5, and maybe each one takes you maybe 10 minutes to go through. So another maybe half hour to an hour to come up with the final trades. All right, what's your typical training day routine when you go through your list to look for training candidates? Do you do it daily? Is it early in the morning? All right, so I look for candidates daily at the end of the day for the next day. So I look at the end of the day, I see what the RSI signals are. I dive deep into the stock if it's oversold or overbought, and that's when time frame I look at it. But not everyone has that ability. What I would say is uh, be consistent. If you want to do it at the beginning of the day, do it all the time at the beginning. Be consistent in when you do it. That's going to be key. So Jeff says, to check stocks, I set up a spreadsheet with stock tickers I follow. And he did a lot of setting up of a spreadsheet, and this is a lot of commentary about it. This is what it looks like, and it's going to be pretty helpful. If you go through his post on on this, you'll see he has a description of all this, which is going to help. He takes a look at different days and looking at the stock and everything, which is great. So appreciate him doing that. A lot of work there. But again, just look at the rules and follow the strategy on the charts and you'll be fine as well. So Steve says, Steve's responding to Vic saying, yeah, he has a watch list as well. He flips through the stocks, about 100 stocks. So just responding to Vic on his spreadsheet. Thanks, Steve. So Jeff says log trades based on SID criteria. Again, based on his spreadsheet, logged about 120 trades. Okay, appreciate you doing that. Now, just Steve says, wondering if it's okay to just trade stocks that have weekly RSI pointing in the same direction as a potential trade. The answer is yes. Matter of fact, weekly The weekly RSI should be pointing in the same direction as the daily RSI for the trade. If it's not, it's a red flag and the trade should be avoided. So weekly on the RSI, not on the MACD. The MACD is a very slow moving indicator, so don't worry about the weekly on the MACD, just worry about the RSI as a red flag. Now, if the RSI and MACD on a weekly point in the same direction, boy, you've got a strong trade. Typically, the MACD 80-90% of the time will not point in the same direction, the weekly one. But on a daily, you need the RSI and MACD to point in the same direction for the trade. Jeff says, looking new stocks to a daily checklist, what's the range of stock prices? So I go between $5 and $300 in terms of the price of stocks I'm looking at. I don't like to look under $5 stocks. And also, I don't want to go over 300. Um, it's just very expensive to do those as well. Bob says Apple shares from this date to that date. He wants our thoughts on Apple shares because they moved. What will your position be with this pattern? Will you trade it? Is this an example what will happen in the market itself at some point are caused by low trading volumes? So here is what we're talking about with Apple. So he's looking at these particular moves, down moves that reversed, and with Apple reversing quite a bit, it's an issue with reversing prices. So you want to stay away from those. And what would you do? Like here, you could see that you got to be oversold, came up nicely, came maybe one down day, and then hit our target RSI 50. So you want to make sure that in this case, your MACD is crossing this when you would get into the trade. It's a less risk trade when the MACD crosses versus when it's just pointing. You could get in on a point trade, but it's a little more risky, but it can work as well. But you want to stay away from these. If you take a look at these as possible entry points, you look at the RSI weekly and you look at the RSI and MACD. Are they crossed? You could see even here the MACD really has not crossed on most of these. Here it did cross, right? But you'd have to check the weekly. So, and again, here you get too close to earnings within 14 days. You don't want to do these trades, right? Okay. This is the two dates that he mentioned in terms of trading. This date, you could see that the MACD here is not crossed on this date. Better trade, the MACD has crossed and it did come down to target. Okay. Again, looking at the same charts for Apple, why you wouldn't trade this is your weekly was not responding as well, and the MACD hadn't crossed. Here, the MACD did cross, so this was a good trade. All right, Jared, would you make a trade on a stock that is showing an overbought, oversignal, but opposite price pattern on the chart? For example, IBM chart shows oversold signal on RSI MACD pointing up, but also shows what appears to be a bull flag. Well, bull flags, other patterns. The only patterns I use are double tops, double bottoms, head and shoulder, invert head and shoulder. Um, you would still take the trade as long as the RSI and MACD indicators align and the rules are followed. So there are a lot of things you can look at the chart, bull flags, all kinds of other patterns. But I don't look at those. I just look at major indicators, RSI and MACD, and then certain price patterns for confirmation. But that would not stop me if I had good alignment here. Do you have a method to decide when to buy stocks and when to buy options? Yeah, if the stock price for me is greater than 200, I'll probably look at options. What do I do for the strike price? It's at the money. ATM means at the money. And expiration, I go out 60 days for options. Now, um, don't be concerned about this if you're not doing options. Options are pretty complicated. It takes a long time to understand them, at least a year of studying them. So if you're doing shares, don't worry about the option piece here. Okay. Do you ever use spreads? Again, it's an advanced option trade. I don't use them. So no, I don't. By the way, after 3 years of hopping from strategies to your methods, the first one is actually proven. Well, thanks for that feedback. Really appreciate it, Jared. Okay. He had mentioned the bear flag on IBM. Again, I just look at the indicators here. This would not stop me, right, from doing it as long as the indicators are good. All right. Sharon, says, what's the number one mistake new traders make with quick wins and how do we avoid it? Great question. So what I've noticed is that a lot of folks getting a quick win, they're trying to finish the projects way too fast, right? You definitely want to get through the project, but you want to make sure that you understand it. And what happens is they go through the project, they submit the answers without really learning the lesson. So that's key. And we have, now if you're in the quick win, we have QA sessions, which I do twice a week. So I think in a lot of people, I think I've noticed the ones that do this don't attend the QA sessions. I don't even know if they're listening to the replays, but there's QA sessions or replays. So I suggest you attend the live sessions. That's the best thing. And if you can't, go to the listen to the replays. Okay, how do you spot a quick win setup versus a false signal? Follow the rules, right? Look for red flags. They're in the rules, right? And it's the weekly RSI line. We just talked about that. Are you trading with the market trend? If the market is going up, if the water in the harbor is coming in, tide's coming in, you most likely want to trade. The boats are going to go up. You most likely want to trade oversold stocks, which are going to go up, and vice versa. Does the strategy work equal in Forex? So get this question a lot. It's developed for stocks and ETFs, and not really back tested in terms of Forex or crypto, right? So basically it's shares, and I'll answer another question. What's the time frame? It's always the daily time frame. I get those two big questions. Does it work in Forex? What's the time frame? It's a daily chart time frame. How do you train your psychology to stick to the rules and avoid breaking the framework? That's another great question. So what happens is I have the Sid Method strategy checklist right up by my side. I've been trading for many, many years, and even so, I have it right next to me. I look at the checklist, even though I know I can recite it. I sometimes I recite it in my sleep. My wife says, "What are you doing?" So, so have it at your side and just make sure you go down the list. The other thing you do, like I showed you on the chart, just put it on the chart and just go through the steps on the chart, and it'll make you stick to the strategy. If you could tweak the quick win strategy, would you change anything or its simplicity is still the biggest edge? There's always room for improvement. Sharon, it's another great question. You get gold stars for all the great questions. But especially when there times like this and the market keeps changing, I'm still committed to the keep it simple SID principle, right? So I don't want to do a lot of changes right now. Obviously, I'll be looking at improving it to see because nothing stays static, right? It's always going to be improving. So great question though. Bob says, "Hey Sid, if placing in trade, your entry position and stop loss are close together." Hmm. In this case, how close is it to close, and what minimum buffer would you hold, if any, or would you just disregard the trade due to a lack of momentum? I I don't understand buffer and momentum. They're not in my watch list, in my checklist, rather. So here, as long as you follow the strategy rules, should be no issue with how close the entry and stop loss. We saw that you can enter and you can have an exit the next day, or you can have a stop loss close to the entry as well. Just follow the rules. And there's no minimum buffer or anything like that required. This was the chart. David has a question with this chart. I said your comment on MACD crossover 12-day MA line crosses a 26-day line. TradingView uses the 1226 calculation for the MACD line and the 9-day EMA. How are the two differ? Well, there's no difference there. If you bring up TradingView, like here, if you look on this lower left, you see the MACD 1226. So that's the MACD. MACD line, which is the blue line, and the red line is the signal line. So the blue line and the signal line are calculated at the same time. Matter of fact, here, the technical indicator, this is the MACD, moving average convergence divergence. MACD line is calculated by subtracting 26-period EMA from the 12-period EMA, and the result of that calculation is the MACD blue line. 9-day EMA of the MACD line is called the signal line. So if we go back to that, we have the blue line, which is the MACD line, and the red line, which is the signal line. And the calculations are done. I just use the default. If you bring up TradingView or any charting program, there should be a default for MACD and RSI, and you just use those. So don't get too confused. It's already there. Don't have to worry about which is which. It calculates it for you. What we're looking for to keep it simple is the crossing and the direction, right? Okay. Um, So James says, hi, Sid, in reference to Project D, example for FCX in particular. Can you please run us through the checking movement of the MACD? Because he's saying, you have entered the trade on the 8th. Can you also please confirm trade entry completed on the slightest alignment? So he's saying we could maybe enter on the 7th. So yeah, this was a project that I've given in a quick win Project D, where I gave you specifically a date. And I said, from this date, do the rest of the strategy. So that date I gave you has an RSI and MACD. In this case, RSI is pointing up. The MACD is just pointing up, not crossing. So what the question is, could you enter a day earlier? Well, if the RSI and MACD are pointing up, yes, you can, as long as they're aligned. I just gave you a specific task to do based on a specific date in the project. Now, if I said trade this, tell me how you would enter, and I didn't give you a date, you could say, yeah, here's the entry date, right when they first align. Okay. That chart was the same thing. Uh, so we got a question. Hope you don't still learning your strategy and curious how well this method works in Asian stock markets. Okay, so the strategy works on stocks in any market as long as you have RSI and MACD indicators on the stock chart. Um, so what will happen is I think folks trading in London Stock Exchange, Australian Stock Exchange. Here are some Asian stocks I just looked up real quickly that trade on both the US and Asian. So you could use these in your watch list, and they trade on both, so you can trade them in Asian. And I'm sure there are many more Asian stocks. As long as you can bring up a chart and you have an RSI and MACD, you can trade it. Um, Harry says a lot of your watch list is American stocks and options. Would trading British and European stocks have any effect? No, it doesn't matter. Again, same type of question. Doesn't matter what exchange you're on as long as you have an RSI and MACD. Now, when you get further advanced, it may make a difference based on fees. But at this point in time, using TradingView, no. Just use the chart and the strategy, and you'll be fine. Doesn't matter size of the company. I like to trade with, I scan for a company at least 500 million capitalization, meaning they're worth 500 million as a company or more. Um, Otherwise, if it's too low, that can be manipulated. The price can be manipulated. Finally, what do you recommend when creating a watch list and which companies you add to it? Add companies conform to the strategy. Remember, I showed you the BTW backtest winners list. As you go through looking at different stocks, if you find stocks that have a 70% win rate, just add them to your watch list, right? And obviously, if you look at these sessions, the cafe sessions and um, the academy sessions, I go through a lot of stocks. And you could do scanning. By the way, Jonathan has a great how to scan for stocks in TradingView. Go into cafe, classroom, TradingView tutorials, and it'll show you how to scan for those. Very new to trading, but a few of my friends are really struggling with the massive, unpredictable moves. Welcome to the stock market. Yeah, right now, that's true with the Trump tariff tantrums, et cetera. Can you give us an advice, guidance, and please? So, trading unpredictable market can be difficult. Here's some suggestions. Trade with the market trend, short-term trend for swing trading, 1 to 20 days. And I showed you that earlier. If the market's going up, you want to trade oversold. Check the history of the stock. You could go back on your charts and just scroll back and see if it conformed to the strategy. That's a little bit of back testing, short-term back testing. Again, Jonathan's going to do back testing tomorrow. So tune in for that. He does some great jobs and show you how to do that. Use the SID method strategy with the indicators for trading confirmation and not prediction. Don't predict, wait for the confirmations. Always use risk management, the position size calculator, 0.5% risk. Never use margin. Um, Margin is available, but never use margin in a volatile market. September is usually the worst month for trading. So keep that in mind. There's some months that are worse than others. So if this is a bad month, you'd want to look for opportunities for overboughts. When the market is trending down and you get overboughts and you get the signals, and September is a down month, you'd want to look at trading those. Don't hesitate to get out of losing trade or take profit on a winning trade, especially with the volatility. Keep your time frame short. Hopefully those will help. Wilbur, looking forward to it. My question, what's the biggest mistake new traders make in the quick win strategy? Yeah, I talked about that earlier, but again, trying to finish the project too quickly, submitting answers without really learning lessons. So attend the live sessions. The QA sessions, that's best. Watch the replay. For projects, check the answer sheet for the first response, and then you can go out and do the rest to see if you're on track instead of doing all of the project and going back and finding out that's not what was required, right? Ask questions if you don't understand. All right. Nora says in terms of this is gold USD. We use for stocks, this is a kind of a Forex. So I just use stocks and ETFs. If you want to trade gold, you could look at gold stocks. These are some examples, GLD, Nugget, GDX, GDXJ. But this is not this is a Forex. So again, we're just using stocks. Fred Camp, okay, how to build confidence in executing trades while still managing risk. And at what exact time is he going? Oh, okay, hopefully you're here. Use the position size calculator to manage the risk. We talked about that. Follow the strategy rules, right? That's how you build confidence on your small wins following the rules. Steven says, sorry, question, I've been out of the loop. Okay. With the SID method, do we not trade 14 days before or after dividends? It's not dividend, it's earnings. So you don't trade within 14 days of earnings. If earnings is coming up and it's within 14 days of the date you want to enter, don't trade it. You can trade the day after earnings if you get the signal, but not 14 days before. All right, let's talk about what's driving the crazy market. There is a lot of optimism for interest rate cuts in September. They've talked about this for a long time, so the market has been up. I don't know what it did today, but I think it's been up, down, but mostly it's been looking forward to these interest rate cuts. Why? Because when the Fed cuts interest rates, companies spend less on borrowing money, so their profits are higher, so the stock price goes up. September, worst month in the market, typically goes down then, but keep an eye on that. That's over many, many years. The last September, the market was up. So it doesn't happen every month, but keep an eye if it goes back to normal. September is a down day. And we have a lot of things going on that could cause September to be a down month. Here's one. The Federal Appeals Court ruled against the Trump deploying tariffs. They're saying he doesn't have that authority. Now Trump is asking the Supreme Court to act as fast to uphold the tariffs. We'll see what happens. But this, when you have something like this, what happens is the market goes into what we call uncertainty, which means it becomes very volatile until this gets straightened out. Jobs report was weak in July. Last month it was weak. So that caused the Fed to say, well, we're more inclined to cut rates. This Friday's jobs report is going to be key. And we'll see what happens. And I think the Fed's going to make a decision within the next week or so in terms of cutting rates. If they cut rates, right, you're going to see the market go up. You don't want to fight the Fed, right? Because if Fed cut rates, it means the market's going to go up. But we'll see if they do it. Stock market futures, at least this morning, we're up slightly, waiting for some jobs data. Don't know what it is now, but again, it's been turning up. It's been reversing quite a bit based on data that comes out, based on things like Federal Appeals Court ruling, things like that. So Goldman Sachs is predicting gold to be at $5,000 in a couple of years, 5,000 per ounce. If the 1% of Treasury, there's 1% of the Treasury funds buys gold. Now, why would they do that? What happens is when interest rates get cut, people that rely on interest income is going to be lower. So they're going to diversify and say, well, I'm not going to get the income I want out of the interest rates, so I'm going to buy something like gold. So gold has been driving up based on that scenario. Gold does not rely on institutions, doesn't rely on the Fed and what the Fed does. It has its own value, right? Okay, here is the market, a view of the spiders, which represents about 80% of the market. We see this long uptrend. This was after we had the big downtrend into April, where we are here, right? Here's the downtrend in April. So we had a long uptrend and we had a big downtrend in April because of tariffs. So our new administration came in and said, well, guess what? We're going to throw tariffs out there on countries. And so the market didn't like that, came back down. And then all of a sudden the talk was, well, we're cutting deals with countries, things are not as bad, and we're looking at rate cuts, interest rate cuts. So that caused the market to start to move up. So we could see we have an overall uptrend. little bit of a pullback on tariffs, and now we're back on the uptrend. So long term, we're in this uptrend, but along the way, what happens is along the way for this uptrend, we have up periods and we have down periods. Market going up, market going down, market going up, market going down, up, down, up, down, up, down. So during these up periods, I showed you the five that I posted in the cafe for trading. They were during an up period. So we got oversold stocks we would trade. During a down period, we look at overbought stocks. Right now, notice it's coming faster and furious, faster and more furious. Up and then down, a long up, then down, the shorter up, then down, the longer up, then now shorter ups, and more downs quicker. It's getting real volatile here with the market. It's still in this long-term uptrend. If you said, what's the market trend long term, I'd say, what term are we looking at? Long term, it's up. Short term, it's been down right here the last few days. Well, depending what happens today, we have one up day. If it keeps going up, then we'd have this green arrow going back up again. So what all this means is you get a lot of volatility, which means you really have to be quick and accurate in making sure you get all the indicators in place before you do a trade and trade small, right? Okay. Now, based on all that, here are some potential trades I looked at. So I went through all these and said, these are the oversolds, meaning RSI less than 30, we would be trading these to go up in price. Now, on oversolds, we had 276 stocks that were oversold, meaning RSI less than 30 when I did a scan on that. Now, the overboughts, notice 962, a lot more overboughts. So if the market starts to come down, we're going to have a lot more opportunities on the overboughts. If the market goes up, we'll have opportunity on oversolds, not as many. Now, these are the specific stock symbols. Now, these are conditions for the RSI and MACD and price pattern to be met for these trades to be valid, right? In some cases, I see you have to wait for the RSI. Some cases, you have to wait for the MACD. But these are the ones I'm looking at for trades based on the signal RSI signals, right? RSI oversold or RSI overbought. All right, so you can take a look at those and see how they work out. All right, let's see. Now, conclusion. So in conclusion, we have the Trump tariff tantrums are still weighing heavy on the market with court rulings and with all kinds of trade deals being done with companies. And I think Trump actually put a 50% tariff on India because they're buying Russian oil, all kinds of crazy things going on, which is causing the market to be very volatile and uncertain. So here is a statement, Fed interest rate cuts. If the Fed cuts rates, as they say they will in September, don't fight the Fed. Meaning when rate cuts, you're going to see the market go up, right? And so we're going to look at oversold stocks. If you go back in history and look at when the Fed took action, you can see that when the Fed cut rates, market went up. When they raised rates, market went down. So the market's in an uptrend, long-term uptrend, but very volatile as we saw. Short-term, it's going to be up or down, right? So position size, use low risk, 0.5% per trade, and stick to the strategy rules. All right. All right. So thanks. Appreciate you being here. And hopefully this was helpful for you as well.